What's up, everybody? Another trading day. Let's go through the trades that I'm in, and the trade that I got out of today. I'm still in Microsoft. This is my strike to 275. As you can see, it's $10 away from that. So this is likely to be a loser. We'll see what happens tomorrow. It would have to drop over 4% for this trade to be a winner. Tesla, I'm still in that as well. I'm in the 700 strike. It's got to go up $50. It's at 651. So you're talking about a 7% move. So this is likely to be a loser. What else am I in? Got another NKL, Baidu also. Although I'm not too far away from my strike, it's only at 178. In the 182.50. So we'll see what that does tomorrow. It may pop in the morning. But if not, if this bar remains blue tomorrow, I'll be getting back in this trade. Zoom popped today. I got in it yesterday, bought the contract at 120. I sold out at $600. I was in the 362.50. It hit a high of 367.10. So it went way in the money. The option hit a high of 680, so I got out at 600, which gave me a 480 profit. So that's considered a home run trade. Anytime I make 4 times my money, excuse me, I consider that to be a home run trade. So far for the week, I'm up with the trade in AMC, which was also a home run trade. This trade here, I caught that pop, made a few $100s, and with the Zoom trade, which will more than take care of the losses. Plus, I made money in NKLA. I did 100% on that, and PLTR. I made money in that as well. So I'm losing on Microsoft, Baidu. We'll see what Baidu does tomorrow, but I'm already chalking up Microsoft and Tesla as losses. Let's see what I might have today. Only signal. Hold on, let's go. Zoom. You can see here the Zoom, the 362.50. It's at 360.74. So now the contract traded back down. So I caught the pop, and then it traded back down. So now it's at 220. So I would still be up $100 if I was still in it. But how can you walk away from 4 times your money? It's hard to. So I don't really see nothing but this Apple trade here. On the put side, I think Apple owes me some money too. I think last time I did an Apple trade was back in July 13th. Yeah, July 13th, and I was a loser on that trade. I think I bought puts then. Yeah, it was a put, the 145 put. So I took an L on that. So they do owe me some money. Let's see if this particular trade is the one. It's gonna give me my money back. If I'm gonna get in it, you know I'm gonna get in a 147 strike. Actually, nah, I'll be getting in a 146 strike. Look at that volume. 67,000 contracts traded today. Apple is just one of those highly liquid options, highly liquid stock options that you can trade. But look at that, 67,000 contracts. So this would be the strike that I would buy. And right now it's at 146.61. So we talking about not even a strong move down. I'm just gonna wait to see if another indicator that I'm looking at lines up with it. I'll take that trade. But other than that, I don't see nothing else. The market was kind of, from the looks of it, kind of quiet, kind of flat. Which happens every now and then. One trade that I did miss, not yesterday, but this week, I missed this DraftKings trade. So it would have been last Friday. It didn't. I probably didn't take it because it didn't show up on the weekly, but you see the 1 and 2 day lined up perfectly. So that's still a valid trade for me. But I typically like to take these trades going into next week, because sometimes Friday you might be buying at a higher price than you would if you would wait till like Monday. But sometimes you just got to go in. Entries are not that important. The most important thing is your exits, because it's in exiting the trade that determines what you win and what you lose. So entries are far less important than what your exits are, and that's just been my experience. Exits is what matters. You know, do you let your losses run, or do you let your profits run? Do you take small gains versus taking long gains and then take large losses? It's all about your exits, not necessarily your entries. And you'll see from time to time I'll make the mistake of trying to get in at rock bottom price, when in actuality I should just get in instead of trying to be so I guess what they call bottom fishing, or trying to get that, you know, that low price. Sometimes you just got to go in. It's not about the entry, it's about the exit. So just keep that in mind, and you'll see as I make these trades on a day-to-day basis, you'll see me sometimes make the mistake of one trade that I recall, the Chipotle trade. I think it was a week ago when it made that pop. Not this one, it was last week. This sell-off right here. It was that Wednesday I got the signal. And remember, I was trying to get in at, I want to say $220. When in actuality, I could have just went into a lower strike. I could have went into a lower strike. If it's not, you know, letting me in, just go down to the next strike. And if that's your price range, take that trade. Well, that trade was a home run, because the sell-off, the option, I'm going to say, went up. I know it went up to like $1,400, if I remember correctly. But that's just an example of, hold on. It's just an example of, don't be worried so much about getting in at the best price. Sometimes you just got to take that trade. Twillo. Oh, it changed up. Let's see why. That complex. Yeah, these dots here. I mean, when you see these dots, I typically like them to line up with checks. But none of these dots I don't see as what I would define as a sell or a buy signal. Patience is the name of the game. So let's look at this Apple trade again. Let's see if I want to get in this. Let me show you something. I hate trades or potential trades like this. I hate when a stock is like in the mid-range. You see it has this area here and this area here, and it's like in the middle of that. I hate trades like that. This would be an expiration trade, so I'm not going to risk much money. I'm just going to buy one contract, because if it does go down, if it does go down significantly, I can make a couple $100 just on a 1 to 2% move, because it's an expiration trade. So with that, I'm gonna get in, but I'm gonna buy one contract. Alright, so I'm in that expiration trade on Apple. I paid $43 for the contract, so I only have $43 at risk. Now, I probably would have went heavier if the chart didn't look like this. It's a signal, but again, the 2-day don't show up again until it doesn't close until tomorrow. So this is invalid. I would have to wait till Friday for this to close. Remember, you can look at the market in different time intervals. This is my weekly chart, my daily, and my 2-day. And I wait for these charts to say the same thing, to tell me the same thing, to give me a trade, be it a buy or a sell. This alone, even though the weekly showed up as a sell the last 2 weeks, but look what Apple has done. You know what I mean? Even though it took that dip, the daily didn't line up with the weekly. So it's lining up today, so we'll see what happens. Again, I'm in the 146, so it's like, yeah, you know, it has to move down, what, 75 cents in order for me to be at the money. So we'll see what happens. Go back. Facebook. Nah, I ain't going for the banana in the tailpipe with Facebook. Nah, let's look at that chart. Facebook is another one that's in this mid-range. You see this all of this price action. Every bar represents 1 day of trading on the daily chart. And on the weekly chart, every bar, green or red, represents 1 week of trading. This here is just too much. And it seems like it's in the mid-range, but you see how it just changed up? It went from yellow to green. So Facebook changed up. So the market closed Again, I only took the Apple trade. I'm in the 146. Got in at 43. It closed at $43. So we'll see what happens. So far for the week, it's been an awesome trading week. Let's see, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. I did 9 trades this week. Hold up. I think that's right. Microsoft. That's 1. Tesla. 2, 3, 4, 5, 6, 7. So Apple, for this week, Apple would be my 8th trade. 10. My 9th trade. Apple would be my 9th trade. And out of 9 trades, depending on what Apple's on, let's just say the 8th trade. Let's not include Apple. I had 1, 2, 3, 4 winners. But the 2 home run trades will take care of the 5 losses. Let me see. Yeah, more than takes care of that. Yep. So when I do a video, I'll probably do a video. I'm definitely going to stream tomorrow, but I'll do a video explaining the past week's trades, and we'll go over it. So again, I'm in Apple, still in Microsoft, which I'm already chalking that as a loser. I'm still in Tesla. That's also a loser. Still in Baidu. Baidu possibly could go up and make me a winner. We'll see what happens. It only has to make a 2.5%, 3% move. And the Apple trade. So we'll see what happens tomorrow. Until then, you guys stay safe. Excuse me. And I'll touch base with you guys tomorrow. Thanks for listening.